Hello, everyone. This is Alpha Omega. Today, I'm going to talk a bit about Fluence Energy. Right now, the stock price has dropped a lot, but honestly, I can't really understand the stock price. I think it has dropped way too much. So, I hope you'll listen to this and share your thoughts as well. Today, I'm going to talk based on the presentation they sent out on May 8th. There are probably several reasons why the stock price dropped so much. First of all, sales have dropped significantly compared to the same period last year. They reported $432 million. So, their performance, that is, their sales, decreased a lot. And as sales went down, their EBITDA loss also grew. The losses got bigger. The net loss also increased. So, regarding this, what the management said was that the sales expected for this quarter have been postponed to the end of 2025. However, the market didn't just sit back and accept that. They really hammered the stock price, just threw it down. Now, what we need to figure out here is whether this drop in sales was due to an internal issue with Fluence, or if it was something that was simply unavoidable for them. In the conference call, what they said was that they're talking about uncertainty. The market is just too uncertain. Because the market is so uncertain, customers have postponed their purchasing plans. At least, that's what they're saying. What they're saying here is that things are really tough right now. For the customers, it's really difficult to give customers a price or a quote at the moment. Because the SS they're making right now doesn't just use American-made batteries, but also Chinese-made batteries. Chinese-made batteries. But if Trump slaps huge tariffs on Chinese batteries, the price of those Chinese batteries is going to go up, right? Then from Fluence's perspective, the price of these energy storage systems is bound to go up. And from the customer's point of view, if the price of these energy storage systems goes up, would they still want to buy them? Of course not. Because if things improve soon and tariffs go down, I could buy this energy storage system at a lower price, so why would I buy it now when tariffs are so high? That's what people are thinking. That's why customers are really hesitant to make purchases right now. You get what I mean, right? So, both Fluence, who wants to sell, and the customers, who want to buy, are having a hard time moving forward with these transactions right now. That's basically how you should understand the situation. So, the biggest issue right now isn't really a problem with Fluence itself, but rather with the international situation, which means things could definitely get better in the future. So, to get straight to the point, I personally believe that the stock price of Fluence, which is currently being hit hardest by tariffs, will recover later on. I want to explain it this way. Once their sales recover, things will improve. Anyway, Fluence has lowered its sales guidance. They originally projected $3.4 billion, but now they've revised it to $2.7 billion, so it's good to keep that in mind as well. Fortunately, the silver lining is the annual recurring revenue. So, this refers to the yearly recurring sales that come from subscriptions to the software provided by Fluence. They said that $145 million would come from this, and the fact that this figure has remained unchanged is somewhat reassuring. If you look here, they say the following. It's not that the reservation contracts with our customers were cancelled, but rather that it was mutually agreed upon. In other words, both parties came to an agreement. Hey, well, the tariffs are so high right now that it's hard for me to sell, too. And it's tough for you to buy as well, right? So we agreed to just wait until the tariffs go down a bit and then sign the contract. So the key point here is that the contract didn't fall through. Once the tariffs go down, sales will eventually happen. So, as I'll mention again later, they still have a large backlog of orders. In other words, I personally believe that this backlog will eventually turn into sales. Given that, I think the current stock price has been pushed down way too much. It's dropped too far. Does that make sense? Let's move on. So, as I mentioned, they've been coordinating with customers and have deferred some of their sales. That's why they're saying, since we've pushed back our sales, we've had to lower our 2025 guidance. Alright, and as I briefly mentioned earlier, though I was planning to explain this later, let me quickly explain annual recurring revenue. This usually refers to subscribing to their software, which we commonly call SaaS. Let's talk. Software as a service. So, customers subscribe to this and pay Fluence. For example, if a customer pays $100 a month, that would be $1,200 a year. This $1,200 is counted as but this was $145 million a year, and it hasn't changed. If this number goes up, that's a really good sign. Because even though Fluence still sells hardware, if their software revenue grows, it means they're increasing their market share on the software side as well. As I mentioned before, this software business has extremely high margins. So, seeing this number go up is also a very positive sign. It would be good to keep an eye on whether this figure goes up or down in the future. Alright, so let's talk about this again. Sales are at $700 million, and the reason we lowered our forecast is, once again, because the contracts we had signed have been pushed back. As for the tariffs we have with China right now, these tariffs are not going to last forever. It's hard to maintain such high tariffs. Soon, things will get easier. They said it would become easier to access, more comfortable to approach, but as expected, just the other day, this is what was said. So, what did Mail Business newspaper say? They said, wow, this is really like a dream scenario. First of all, they said that old citizens could breathe a sigh of relief, as both the US and China have each lowered tariffs by 115 percentage points. What happens when tariffs are lowered? In the end, the price of batteries that Fluence imports from China will go down, and the price of ESS energy storage systems will also decrease. So what will the customers who are waiting for the ESS prices to drop do now? They'll sign contracts. And what does that lead to? It leads to increased sales. So, if tariffs stabilize a bit, I personally think that Fluence sales will bounce back quickly. And also, they still have a really huge backlog. So right now, their backlog stands at $4.9 billion. And where is this backlog mainly coming from? The biggest part is the US, and then EMEA. Do you know where that is? EMEA stands for the Middle East and Europe, so it refers to the Middle Eastern and European regions. And then there's the Asia-Pacific region as well, so it's good to keep in mind that they're dividing it up, like this. Now, after their green stack, they've also launched a new hardware product called the Smart Stack. This is their latest new product on the market. So they've already released it, and contracts have already been signed to deliver it in 2026. This means customers have already bought it. The main advantage of this is its high energy density. In other words, it has a high energy density. So, for the same size, it can store more energy, plus it's easy to install and the installation costs are low. They also mention that it's safe, but in this quarter's report, there wasn't much information about the Smart Stack. That's because their sales have dropped significantly, so most of the questions and content focused on that, and there wasn't much about the Smart Stack. Please keep that in mind. Now, the current stock price is $5.27. We need to think about whether $5.27 is actually a cheap price or an expensive one. Let's take a look at the chart in the back. So, first of all, I selected 6 listed companies that are in the energy storage business. But NextEra and these guys, and MP Energy, their enterprise value is really huge. They're really big. The 3 companies listed below, so STEM, Fluence, and I forgot the name of the other one, these guys still have negative EPS, meaning their earnings per share are in the red. So they don't even have a P/E ratio. So, let's try comparing just these 3 for now. Companies that are about the same size. Alright, so let's take a look at Fluence. Shall we check out their revenue? Fluence actually has the highest revenue, $430 million. STEM, on the other hand, is at $32 million. But if you look at their stock prices, Fluence is at $5.27 and STEM is at $5.54. What I want to point out, here is the EV/sales ratio. If you look at this, let me explain a bit about what the EV/sales ratio is. I've written it out clearly here, so feel free to take a screenshot if you'd like. So, the EV/sales ratio shows how much value investors are paying for each dollar of a company's revenue. For example, let's say a company's enterprise value is $10 billion. Next, let's say the company's annual revenue is $200 million. Then, the EV/sales ratio would be $10 billion divided by $200 million, which comes out to 5. So, if the EV/sales ratio is 5, what does that $5 actually mean? It means that investors are valuing each dollar of revenue at $5. What this means is that by valuing it at $5, we are judging that in the future, they will be able to create $5 worth of value right now. It's a positive assessment. The more positively people view the company, the higher the EV/sales ratio goes. It's similar to when we talk about high PR or low PR stocks, the PR, you know. Just like the PR goes up, companies that are expected to grow in the future will see their EV/sales ratio increase. But right now, Fluence EV/sales is 0.28. That means they're valuing each dollar of revenue at only 28 cents. I mean, at the very least, if a company generates this much revenue, shouldn't it be valued at least equally, at least given the same value as its revenue? Shouldn't work, be graded, but they're generating 1 unit of revenue, yet the company is being valued at only 0.28 times that. So first of all, the fact that this figure is 0.28, meaning it's lower than 1 unit of revenue, shows that the market sees Fluence's future as not promising, which is why the EV to sales ratio has dropped below 1. But as I've mentioned so far, the reason Fluence Energy's revenue has decreased isn't because of poor management, product issues, or software problems within the company, but rather because of unavoidable political and economic circumstances outside of Fluence. But, in my personal opinion, this situation will improve in the future, so the revenue will recover, and I just can't accept this EV/sales ratio of 2.8. This is the historical EV/sales ratio of Fluence Energy. When their numbers were soaring, it even went up to 2.8. And considering that the average EV/sales ratio for companies in the energy storage industry is 3.0, the current EV/sales valuation for Fluence Energy is ridiculously low. You get what I mean, right? So, as I showed you earlier, in the table, here are the valuations I explained before. When you compare these, of course, if their P/E ratios are 20 to 22, 17, 20, and so on, it means people are expecting earnings per share to be 20 times higher. That shows how much people are looking forward to the future. But even though they're in the same business, and even with STEM, too, AV, in other words, their enterprise values, are also almost the same. But, even though STEM's revenue is much smaller, it's still recording an EV to sales ratio of over 20. Looking at this, I personally think Fluence's current valuation is way too low. So, to sum up, I've talked about the current situation of Fluence Energy, shared my personal outlook on Fluence's future, and also mentioned that I think Fluence's current stock price is way too low. So, if you have any thoughts after watching this video, or if you have a different opinion or anything to add, I'd really appreciate it if you could leave a comment. That's all for Fluence Energy today, so I'll wrap things up here. Thank you.